Now come to the next problem related to cash flow from operating activities. How to calculate cash flow from operating activities. Okay, so we'll see the question based on cash flow from operating activities. So read the question carefully, pause the button, read the question carefully. Okay, then you see how this problem is going to solve. Now the question is, calculate cash flow from operating activities. Calculate cash flow from operating activities from the following balance sheet of Himalaya Limited. So balance sheet of Himalaya Limited has given 2 consecutive years information in the balance sheet is given 2017, 31st March 2017 and 31st March 2018. Okay, so in balance sheet, equity and liability side, which start with the equity and liability, shareholders fund. Under the shareholders fund there is a share capital, thereafter reserve and surplus. In reserve and surplus, note number 1 is given, so you refer the note number 1 immediately. So in note number 1, in reserve and surplus, it has given that general reserve and profit and loss account is there. Profit and loss balance is given. Now coming to the balance sheet, return to the balance sheet from the note number 1. Second is non-current liability. Under the non-current liability, there is a long-term borrowings. Note number 2. Now you immediately refer the note number 2, what it has written in the note number 2. When I refer to the note number 2, in long-term borrowings, there is a 9% debenture. Now immediately I come back to the balance sheet. Next, third item is in the balance sheet, third heading is current liability. Under the current liability, trade payable is there. Thereafter, the total of equity and liabilities. Now, asset side, first one is non-current assets. Under the non-current assets, first one is fixed assets. Fixed assets, note number 3 is given, note number 3 detail. So, we will refer note number 3 immediately. So, in note number 3, in fixed assets, machinery has given and less provision for depreciation is given in note number 3. Now immediately I come back to the balance sheet. Next item is non-current investment. Non-current investment, note number 4. So I referred the note number 4. In note number 4 it is mentioned that the rate of interest on investment is 8% per annum. Okay. Now immediately I come back to the balance sheet. Return to the balance sheet. Next item is after non-current assets, next item is current assets. Under current assets, 2 assets is given, trade receivable and cash equivalent. Okay. In additional information, there the 2 information is given in the additional information. Information number 1, additional debenture were issued on 1st April 2017. Means debenture is issued on the first day of the financial year 2017-18. Additional investment were also made on 1st April 2017. This information is given to calculate the interest on debenture and interest on investment. So we will start with the calculation of cash flow from operating activities. So the heading, you give the heading cash flow from operating activities. You give the heading calculation of cash flow from operating activity. So this will start with the net profit before tax. Okay, we will see the net profit before tax and extraordinary item. So see the note number 1. In note number 1, in reserve and surplus, profit and loss is given. Last year profit and loss is 20,000 minus, and in 2080 it is 50,000 plus. So the profit, you write the profit during the year, you write the difference. Last year it is 20,000 minus, okay, so we'll take the difference 20,000 minus, and this year 50,000 plus. So by covering 20,000 the company reached to 50,000 plus side. So the net profit will be the difference of 20,000 minus, it is in minus, we'll take the difference of 50,000 plus, this is 50,000 plus, we'll take the difference in between these two. So 20,000 minus plus 50,000, so difference we will take it, we'll take the difference. So minus 20, it's a minus 20, suppose it's a minus 20, it's a minus 20, and the profit reached to 50,000 plus. It means the profit earned during the year is 70,000 the profit earned. So you add it, minus 70 plus 50, it is 70,000 profit earned. After adjusting this 20,000, the profit is 50,000 is reflecting. So the profit during the year is 70,000, because after adjusting minus 20, the profit for the year 2080 reflecting over year is 50,000. So actual profit earned during the year is 70,000. Actual profit is 70,000. So write the profit. This is the difference of two consecutive years profit. So one year it is loss and another year it is a profit. So covering the loss, they reach to the profit level. So minus 20 and then you add plus 50, then it's a 70,000 profit earned. Then out of that 20 is deducted, then 50,000 the profit which is reflecting during the year. Next is you add reserve and surplus. You add reserve and transfer to reserve. You add transfer to general reserve. Transfer to general reserve. Okay, transfer to general reserve. See the working note number 1. General reserve last year it was 1 lakh in 2017, and this year it is to 1,20,000. In 2018 it is 1,20,000. So 1 lakh to 1,20,000. So it is increased by 20,000. It means 20,000 general reserve is transfer from the profit. So transfer to general reserve in the current year is 20,000. That is the difference of what? 1,20,000 minus 1 lakh. Last year it was 1 lakh. This year it is 1,20,000. So 20,000 general reserve is transferred from the appropriations. Next is there any other items? You see, is there any other items? No. Thereafter there is no appropriation of profit except the general reserve. So you add it. So this figure will be, you can say, profit before tax and extraordinary item. Extraordinary item, okay, 90,000. Then you add here non-cash expenses and non-operating expenses and losses. You add this one, non-cash expenses and non-operating expenses and losses, you add it. So here the non-cash expenses is your depreciation. Note number 3, you see provision for depreciation last year was 1,10,000 and this year it is 1,50,000. So depreciation is increased by 40,000. So depreciation is a non-cash expenses. Depreciation on machinery is a non-cash expenses. Last year depreciation, which is given in the note number 3, is 1,10,000 and this year it is 1,50,000. So it is increased by 40,000. 40,000 is the depreciation on machinery. This is a non-cash expenses. And now see, non-operating expenses is interest on debenture. Interest on debenture. You see the interest on debenture in note number 3 and note number 2. In long term borrowing, 9% debenture is there. Last year it is 1 lakh and this year it is 1,50,000. And in additional information, it is clearly mentioned that the debenture is issued on 1st April 2017. So we will calculate the interest on 1,50,000 at the rate of interest on debenture is at the rate of 9%. So 9% of 1,50,000. So it is 13,500. 13,500 is the interest on debenture. Okay, interest on debenture is 13,500 is the interest on debenture. You add it, it is 53,500. After addition 0,053, 1,43,500. Now you deduct non-operating incomes and gain. Non-operating, you know the process. Non-operating incomes, if any, or gain if any, what we will do, we will deduct it. We will deduct it because we want to know the cash flow from operating activities. So if there is any non-operating incomes and gains are added to this profit, we will deduct it. So non-operating incomes and gains will be deducted. Why will deduct? Because we are going to find out. We are going to find out what? We are going to find out cash flow from operating activities. So non-operating incomes and gains, there is an investment. In asset side you see there is a non-current investment, and you see the note number 4, interest on investment is at the rate of 8%. And again you refer additional information number 2, where it is clearly mentioned that additional investment were made on 1st April 2017. So interest will be calculated. We will calculate the interest. This is the income. Interest on investment is a non-operating income. Interest on investment. This is what? This is non-operating income. Interest on investment. So investment is how much? Investment is non-operating investment is non-current investment is 50,000 is the non-current investment. Okay, 50,000 into rate of interest is 8%. Rate of interest is 8%. So 8% of this is 4,000. 4,000. This will we deduct it. We will deduct the 4,000 from this. So There is no other non-operating income except this one. There is no other non-operating incomes and gain in this question. So this 4,000 we will deduct it. We will deduct the 4,000 and after deduction 0, 9, 3, 1,39,500. So it's the operating profit before change in working capital. This is what it is called, operating profit before change in working capital, before change in working capital. Okay, before change in working capital. Thereafter we will add decrease in current assets and increase in current liability. This will we add. Decrease in current assets and increase in current liability will be added, and vice versa, increase in current assets and decrease in current liability will be deducted. Increase in current assets and decrease in current liability will be deducted by us. Now see, after that we will see the decrease in current assets and increase in current liability, and vice versa, increase in current assets and decrease in current liability will be deducted. So see in this question, current assets, under the current asset there is a trade receivable. Last year trade receivable was 1,14,000 and this year trade receivable in 2018 is 83,000. So trade receivable is a current assets which is decreased. So decrease in current assets we will add it. So trade receivable, you write the trade receivable. So trade receivable is decreased. So decrease in current assets we will add it. So it is decreased by how much amount? It is 1,14,000 last year. The amount figure is 1,14,000 and this year it is 83,000. So it is decreased by 31,000. So 31,000 we will add it, 31,000. Okay. Another is cash and cash equivalent. We'll do the treatment separately at last after adding the cash flow from operating, investing and financing. Then we add the cash and cash equivalent opening, that will be equivalent to cash and cash equivalent closing. So in current assets we are not going to take the cash and cash equivalent under the operating activities. Next is current liability. Under the current liability there is only one single liability, that is the current liability, that is trade payables. So trade payable last year it was 60,000 and this year in 2018 it is 40,000. So trade payable last year 60,000 and this year it is 40,000. So trade payable is decreased. So decrease in current liability we will deduct it. So trade payable will be deducted by us. Trade payables. So trade payables is reduced by 60,000 to 40,000. So it is reduced by 20,000. This will be deducted. Okay, there is no other item. So this 31,000 we will add it. So when we add the 31,000, so 0,050,711, 1,70,500. Okay, 1,70,000, and then we deduct 20,000 from it. 20,000 will be deducted. So the figure is 1,50,500. So this is cash flow from operating activities. Cash flow from operating activities. Answer is what? Cash flow from operating activities. This one. Cash flow from operating activity is 1,50,500. Is it clear? 1,50,500 is the cash flow from operating activities. Now we will see the another question. Here also we will calculate cash flow from operating activities. Here the information is given in the question in a different manner. Here the balance sheet is not directly given. Here the statement of profit and loss is given, and some additional information is given. On the basis of that, we will calculate cash flow from operating activities. So the question is, the following is the statement of profit and loss account. Statement of profit and loss is given in the question. So following is the statement of profit and loss of Z Limited for the year ended 31st March 2018. Okay. So in this statement, profit and loss statement, revenue from operation is given, expenses number 2, purchase, change in inventories, depreciation and amortization and other expense, thereafter the total expense, and then profit before tax 1 minus 2. That is 8,000 is the profit before tax. In additional information, it has given sundry creditors increased by 40,000 during the year, sundry debtors increased by 70,000 during the year, outstanding wages decreased by 10,000, bills receivable decreased by 5,000, and prepaid expense decreased by 20,000 during the year. Compute cash flow from operation by indirect methods. Okay. Now we are going to calculate the cash flow from operating activities for the year ended. This will be calculated for the year ended 31st March 2018. So cash flow from operating activities of, the name of the company is Z Limited. Cash flow from operating activities of Z Limited we are going to calculate. Okay. So I have written cash flow from operating activities for the year ended 31st March 2018. So here we will start with the first, we will start with the profit before tax. Profit before tax, which is given in the question, directly given in the question. Profit before tax is 8 lakhs. This is 8 lakhs. These figures are in rupees. Okay, these figures are in rupees. So profit before tax is 8 lakhs. Now you see the statement of profit and loss in the expenses, under the head expenses, what are the items? Change in inventory, that is change in inventory will be reflected in the change of working capital. When we are calculating the change of increase or decrease in current assets, then on that time we will see the change in inventories. Thereafter depreciation and amortization, it's a non-cash expense, so we will add non-cash expenses and non-operating non-operating expenses and losses if any. Okay, so under this the depreciation and amortization is coming under this. Depreciation and amortizations and amortization expenses and amortization expense, depreciation expense and amortization expense, that is 80,000. There is no non-operating incomes and gains, so we will add it. 80,000 we will add it. Okay, we will add 80,000, so this is 8,80,000. Next step is what? We will deduct non-operating incomes and gains. Non-operating incomes and gains will be deducted by us. Incomes and gains will be deducted. Non-operating incomes and gains. But there is no non-operating incomes and gains. There is no non-operating incomes and gains. In this, in A Limited, in Z Limited, there is no non-operating incomes and gains. Now this profit is called operating profit. Operating profit before change in working capital. Before change in working capital. Now thereafter the next step is add decrease in current assets and increase in current liability. Decrease in current assets and increase in current liability will be added, and less we will deduct vice versa increase in current assets. If the current assets will increase, then we will deduct it, and similarly if there is a decrease in current liability, then we will decrease it, because it indicates the flow of cash, outflow of cash. This shows the inflow of cash and this shows the outflow of cash under operating activity. So decrease in current assets and increase in current liability will be added, and vice versa will be deducted. Now see, first one is in additional information. Sundry creditors increased by 40,000. So sundry creditors increase. Sundry creditors is a current liability. So when the current liability sundry creditors is increased by how much amount? By 40,000. Sundry creditors it is increased by 40. Okay. Next is sundry debtors increased by 70. Sundry debtors is the current assets. Current assets, sundry debtors is increased. Sundry debtors is increase. Sundry debtors, this is what? Sundry debtors. So sundry debtors is increased by 70,000. Okay, this will be deducted. Next is outstanding wages decrease. So decrease in current liability. Outstanding wages is current liability. Outstanding wages is what? Outstanding wages is current liability, and current liability here it is decreasing by 10,000. Current liability is decreased by 10,000. Next is bills receivable decrease. Bills receivable is the current assets. So bills receivable is decreased by 5,000. Bills receivable is decreased by 5,000. Bills receivable is current assets. Next is prepaid expenses decrease. Prepaid expenses is also a current liability. Prepaid expenses. Prepaid expenses is current assets, and this assets is also decreased by 20,000. This is decreased by 20,000. Okay. Now seeing the statement of PL, come to the statement of PL, come inside the statement of PL under the second heading expenses. Under the expenses you see the just bottom of the purchase, change in inventories. So change in from opening to closing inventory, opening inventory was 8 lakhs and closing is 9 lakhs. So it is increase, inventory is increase. Okay, inventory is our current assets. So increase in current assets, inventory. Last year inventory was 8 lakhs and this year inventory is 9 lakhs. Where it has given? It is given inside the statement of PL in the change in inventories, opening minus closing. So it is 1 lakh. The difference is change in inventory is 1 lakh. Change in inventory. So is it completed? Now we will add this one in this amount 00056, 65,000 we will add it. So 0005499, 9,45,000, and this will be, we will deduct it because it is less. This one is add. So 1,80,000 we will deduct. We will show it in the bracket. Bracket indicate the negative. So this all minus, this all minus. Okay. So 7,65,000. So this is what 7,65,000 is cash flow from operating activities. Operating activities. Cash flow from operating activities, how much? 7,65,000. 7,65,000. Now come to the next question of cash flow from operating activities. Come to the next question. Here the way of information given for calculation is quite different. In this question, from the following information, calculate cash flow from operating activities. Profit and loss balance of the two consecutive year is given, 2017 and 2018. In 2017, balance is debit. Debit balance of profit and loss indicate what? Profit or loss? Debit balance of profit and loss indicate profit or loss. It indicate loss. And credit balance of profit and loss indicate profit. So you see the balance, whether the balance of profit and loss is debit or credit. If the debit balance is there, it means there is a loss, and when there is a credit balance is given, then it's a profit. And no balance is given in the question, it means it's a credit balance, it's a gain, it's a profit. Thereafter, writing of preliminary expenses, transfer to general reserve, transfer to provision for doubtful dates, increase in trade receivable, then trade payable of the two consecutive year is given, prepaid expenses of the two consecutive year is given, and outstanding expenses of the previous year is given only. Current year outstanding expenses is not given. You have to calculate from this information cash flow from operating activities. So you give the heading cash flow from operating activity of, name of the company is not mentioned, I am putting dash over here, for the year ended 31st March 2018. Okay, for the year ended 31st March 2018. So we'll start with the profit. We'll start with the profit. Profit during the year is profit during the year which is given in the question is profit during the year after appropriation. This profit is after appropriation. So profit during the year after appropriation is, last year profit was there, last year there was a loss, last year the loss, and this year, current year, there is a profit of 60,000 is the profit in the current year. So the profit of the current year will be 72,000. We will see the difference of profit of 2017 profit and 2018 profit. Will take the difference. So difference is what? Last year it was loss, in minus, and this year it is in plus 60,000. So it means that during the year profit is 72. After adjusting 12,000, the profit is 60,000. So you do the addition. 72 is the profit during the year. After adding this, after adjusting this loss, the profit is 60. Means 72 minus 12, the profit during the year is showing 60 after adjustment of the previous year loss. So you add it. If there is a loss last year and this year is the profit, so the current year profit is 72. Add this one, 12 plus 60. Don't apply the rules of mathematics, minus 12 plus 60 is equal to 48. Don't apply these rules, because it's a chart. This is 0, okay, and this side is a plus figure, 20,000, 20, 40, 60, 80, okay, and this side is what? It is minus side, 20, minus 40. So last year the profit is, loss is here, minus, loss is here, 12,000 is the loss last year, 12,000 is the loss, and this year the profit is 60,000, profit is 60,000. So here the cover is how much? It covers total 72,000 cover up. So after adjusting this 12, the profit reflecting in the profit and loss is 60. So profit during the year we will take 72,000. Now you add the appropriation of profit. In appropriation of profit, transfer to general reserve. Transfer to general reserve. Transfer to general reserves. See in the question, transfer to general reserve is how much? Transfer to general reserve is given 40,000. This amount transfer to general reserve is 40,000. There is no other allocation of profit. Okay, there is no proposed dividend, interim dividend. There is no as such information. So this will be called 1,12,000. This is the net profit before tax. Profit before tax. Okay. Now you add non-cash expenses, and non-operating expenses and losses. We are going to add it, and what will deduct? We will deduct non-operating incomes and gains will be deducted by us. Non-operating incomes and gains will be deducted by us. Okay, this will be deducted by us. Non-operating incomes and gains, and non-cash expenses and non-operating expenses and losses, we will add it. Now seeing this information, writing of preliminary expenses. Writing of preliminary expenses is non-operating expenses. Writing of preliminary expenses written off. This is a non-cash expense written off. Preliminary expenses written off. Preliminary expenses written off is how much? It is 10,000. Okay. Transfer to provision for doubtful dates. It's also a non-operating expenses. Provision for. It's also a non-cash expenses. Provision for doubtful dates. Provision for doubtful dates. Provision for doubtful dates. How much amount we have transferred? 6,000 we have transferred to the provision for doubtful dates. Okay. There is no non-operating incomes and gains. So we will add it 16,000 on it. We will add it. So it is 0,00821, 1,28,000. And there is no non-operating incomes and gains. There is no non-operating incomes and gains. Okay. Non-operating incomes and gains. There is no non-operating incomes and gains. So it is 1,28,000 is the operating profit before change in working capital. Before change in working capital. Now see the next. After that, after knowing this one, operating profit before change in working capital, you add decrease in current assets and increase in current liability. This you added. Decrease in current assets and increase in current liability will be added, and vice versa will be deducted from the previous figure. So increase in current liability, increase in current assets and decrease in current liability will be deducted. Is it clear? This will be deducted. So now coming to the increase in trade receivable. Trade receivable is the current assets. Trade receivable means both debtors and bills receivable comes under the trade receivable, jointly known as trade receivable. So trade receivable is a current assets. So current assets, trade receivable is increasing. So trade receivable, what we'll do? We will deduct the trade receivable because it is increasing by 32,000. Next is trade payables. Last year it is 60,000 and in 2018 it is 52,000. So trade payables is decreased by 8,000. So decrease in current liability. Trade payables is decrease. Trade payable is a current liability. Trade payables. Last year it was 60, this year it is 52. So it is decreased by 8,000. Trade payables. Payables means both creditors and bills payable comes under the trade payables. You may say that creditors and bills payable jointly known as trade payables. So trade payables is decreased. So decrease in current liability we will deduct. Next is prepaid expense. Prepaid expense is the assets. It's a current assets. So last year prepaid expenses in 2017 it is given 7,500 and in 2018 it is 5,000. So prepaid expenses is also decreased. Prepaid expense is a current assets. So current assets decrease, so we will add it. Prepaid expenses is decreased by how much amount? It is decreased by 2500, from 7500 to 5000. Next is outstanding expenses. Last year outstanding expenses in 2017 it has given 4000, and in the current year no information about the outstanding expenses. So there is no outstanding expenses in 2018. So last year it was 4000 and this year there is no outstanding expenses. It means outstanding expenses is decreased. Outstanding expenses is a current liability. So current liability decrease in current liability. So when the current liability will decrease, we will deduct it. Outstanding expenses is decreased by 4000. Okay, outstanding expenses is decreased by 4000. Any doubt? So every information is taken into account which is required to calculate the cash flow from operating activities. Now you add this figure 2500. So after adding it, it is 1,30,500, and now you deduct this one. So it is 44,000. We are going to deduct it. 44,000. So here the 0, 0, 5, 6, okay, and 8. 86,500. 86,500 is cash flow from operating activities. Is it clear? Operating activities. This is the cash flow from operating activities. Find an answer. So we have solved so many problems based on the cash flow from operating activities. I hope this particular cash flow from operating activity is clear to you. I hope so. Okay. Do the practice as much as you can do the practice. Do the practice from the illustration and do the practice from the exercise as well. As much as you do the practice, that much confidence will build up. Now coming to the next in cash flow statement, cash flow from investing activities. Operating is completed. Now coming to the cash flow from investing activities. In investing activities, purchase and sale of assets, purchase and sale of non-current assets and investments, and interest received, dividend received. This comes under the investing activities. Purchase, acquisition and disposal of fixed assets and investment, as well as interest received and dividend received on investment. This comes under the investing activities. So this question is based on investing activities. So question is, calculate cash flow from investing activities from the following information. Information is given for the two consecutive year 2014 and 2015. So investment in land, the 2 years information is given. Investment in land, 10% long term investment, plant and machinery and goodwill. These two information is given of two consecutive years. In additional information, a machine costing rupees 40,000, depreciation provided thereon rupees 12,000 was sold for rupees 35,000. Depreciation charged during the year is 60,000. Okay, this much information is given, and from this information you calculate cash flow from investing activity. So give the heading cash flow from investing activities. This heading will be cash flow from investing activities. We are going to calculate the investing activities. Cash flow from investing activities for the year ended 31st March 2015. Okay, 31st March 2015. So as per this information, first of all, in working note I am going to prepare one ledger. In working note I am going to prepare the ledger of whose ledger of plant and machinery ledger, plant and machinery account. I am going to prepare the ledger of plant and machinery. Okay, plant and machinery. Ledger of plant and machinery. Okay, this side is your credit side and this is your debit side. This is what? This is working notes. So see the information regarding the plant and machinery. Plant and machinery in 2014 it was 2 lakhs and in 2015 it is 3 lakhs. So 2014 figure I am going to write it over here to balance brought down. Plant and machinery is the assets, and we know that all assets have a debit balance. So plant and machinery of the previous year will be the opening balance for the current year. So 2 lakh is the opening balance, 2 lakhs. Is it clear? It is 2 lakhs. Plant and machinery opening balance 2 lakh. Next is plant and machinery closing balance is given by balance carried down. It is given, closing balance is given 3 lakhs is the closing balance. 3 lakhs is the closing balance of plant and machinery. Now in additional information regarding the machinery has given machine whose cost of machine is 40,000. Cost is 40,000. So cost of machine is 40,000. You deduct the depreciation thereon, depreciation on this machine which is given in the question. Depreciation provided thereon is 12,000. Okay. Now the written down value is 28,000 is the written down value after depreciation. Now this machine is sold for rupees. In additional information, machine costing 40,000, depreciation provided 12,000, was sold for rupees 35,000. This machine is sold for rupees 35,000. So above than the written down value, so 7,000 is the profit on sale. This indicate what? Profit on sale of machine. Profit on sale of machine is 7,000. Okay. Now coming over here, in plant and machinery account, opening balance is this, closing balance is this. The machinery sold for rupees by bank account, machinery sold for rupees 35,000 by bank account 35,000. This information I have posted that side in plant and machinery, and the profit on sale we will write this side to profit and loss account or statement of PL. You write statement of PL to statement of profit and loss is how much? 7,000 is the profit. If there will be a loss, then we will write by statement of PL. Okay. Next is depreciation charged during the year. By depreciation charged during the year is 60,000 is the depreciation charged during the year. This is the depreciation which is charged during the year. So we will find it out. Now see which side total is more. This side total is more. This side is 3,95,000. Credit side total is 3,95,000, and I am going to write the same total over this side, 3,95,000, to find out the difference amount. Difference amount indicate the purchase of plant and machinery to bank account. This is what? This is balancing figure. Through the balancing figure we are going to find out the purchase of plant and machinery. So purchase of plant and machinery is the difference amount. 1,88,000 is the purchase of plant and machinery. This is the difference amount. This is what? This is difference amount. So when I am coming to the investing activities, this is what? Purchase of plant and machinery. Purchase of plant and machinery. Is it clear? Purchase of plant and machinery is the outflow, 1,88,000. It is what? It is outflow of cash and cash equivalent. When we purchase, then outflow of cash and cash equivalent. And sale of machinery is the inflow. Sale of machinery is the inflow of cash and cash equivalent. That is sold at rupees 35,000 is the inflow. This is inflow. Sale of machinery is the inflow. Sale of machinery, proceeds received from sale of machinery is inflow, and purchase of plant and machinery indicate outflow of cash and cash equivalent under the investing activities. So I have done the working about the plant and machinery. Now coming to the investment in land. Investment in land. Last year investment in land was 6 lakhs, and in 2015 it is 16 lakhs. Last year in 2014 investment in land is reflecting 6 lakhs, and in 2015 it becomes 16 lakhs. So difference indicate what? Difference indicate the purchase of land. Difference, it is increased. So this increase indicate what? This increase indicate the purchase of land. Purchase of land, 10 lakhs is the purchase of land. This is also outflow. Okay, this is also outflow. Is it clear? This is also outflow. So is it necessary to prepare the land account? Okay, I am going to prepare the land account. Suppose land account. I am going to prepare the land account. So in debit side, and this is your credit side. Opening balance to balance brought down, which is given in the question. 2014 figure will be the opening balance for the 2016-15. So opening is this, closing is 16 lakhs. So this difference indicate, and no other information is given regarding this land. So this indicate the difference, indicate the purchase, means 10 lakh indicate the purchase of land 16. This indicate the purchase of land balancing figure. Is it clear? Balancing figure 10 lakhs. Next is coming to the 10% long-term investment. Long-term investment, last year it was 4 lakhs and this year it is 2,50,000. So investment is reduced. Investment is reduced means there is a sale of investment, sale of proceeds received from the sale of investment. You may write this way: proceeds received, proceeds from sale of investment. Last year it was, investment was last year 4 lakhs and this year it is 2,50,000. It means 1,50,000 investment is sold. There is sale of investment of rupees 1,50,000. Is it clear? 1,50,000. Next is, you see the goodwill. Goodwill last year it was 15 and this year it is 80,000. It means there is a purchase of goodwill. Purchase of goodwill. Purchase of goodwill. This is the outflow under the investing activities. Outflow difference is how much? 65. Purchase of goodwill. Last year it was 15 and this year it is 80. So it is increased by 65. This increase of goodwill indicate the purchase of goodwill. Okay. So purchase of goodwill is 65. Outflow. Now there is one information in the particular, you see 10% long-term investment. Okay. 10% long-term investment. Investment is decreased from 4 lakh to 2,50,000. So now what we will assume that this sale of investment is done at the first day of the accounting year or at the last day of the financial year. This is our assumption. If we assume that this sale of long-term investment is done at the end of the financial year, then the interest will be calculated on 4 lakhs. Okay. So interest on investment is your inflow. Interest on investment is coming under the investing activities. Interest on investment. So if we consider that the investment is sold at the last day of the current financial year, means in 31st March 2015 it is sold, then we will get the interest on 4 lakhs. And if we assume that the investment is sold at the first day of the financial year, then the interest will be received on 2,50,000. So whatever we assume, we write in the working note. So in the working note I am taking 4 lakhs. So I am in working note, I will write I here assume that the investment is sold at the last day of the financial year. You write in the notes, in the working note you write it, I assume that the investment is sold at the end of the current financial year. That is 2014-15. Current financial year is 2014-15. So interest on investment is 10%, so it is 40,000 is the interest on investment. Now you add it, this one, this is a minus figure, outflow 0,003,511 11,53,000 11,53,000 512 12 lakh 53,000. Okay, this is your minus figure, outflow. Here outflow is more than inflow, and inflow is 0,005 to 2 lakh 25,000 is the inflow. So you deduct it. So net figure is 0,008 okay, 10 lakh 28,000 is the net figure. 10 lakh 28,000 is the net figure. So net cash used in investing activities, cash, this is a minus figure, so show it in the bracket. Minus is more than the plus. So cash used, we will use the word used, cash used in investing activities, cash used in investing activities. Cash used in investing activity is 10 lakh 28,000. This is the cash which is used in investing activities. So working note number 1, this is the working note number 1. Number 2, here we have calculated profit oblique loss on sale of machinery. This is the heading of this calculation, profit oblique loss on sale of machinery. Okay, this one. Thereafter the land account, third working note. Fourth working note, you have to write in the note what you assumed regarding the sale of investment. Here we assume that the investment is sold at the end of the current financial year. That's why we have calculated the interest on 4 lakhs. If we assume that the investment is sold at the beginning of the current financial year, first day of the current financial year, then the interest will be calculated on 2,50,000. So this will vary depending upon our assumptions. So no assumption, no information is given, then you may consider it that it is sold at the end of the current financial year. But you must give the informations in your notes, that what you have assumed while solving this problem. Is it clear? Now see the next problem based on the same calculation of flow from investing activities, cash flow from investing activities. So question is given in a different pattern. From the following information, calculate cash flow from investing activities. So information for two consecutive year is given, 2016-17, 2016 and 2017, means 31st March 2016 and 31st March 2017. Land, plant and machinery, investment long term, and land at cost. In additional information, it has given that depreciation charged on plant and machinery 72,000. Number one additional information. Number second is plant and machinery with a book value of 1,20,000 was sold for rupees 75,000. Number third, investment were purchased for rupees 3 lakhs. Some investment were sold at a loss of 10,000. Interest received on investment during the year is 15,000. Next is land was sold at a profit of 80,000. So from this information you prepare the cash flow from investing activities. First of all, we'll do the working notes regarding the plant and machinery first, because there's some additional information is given regarding the plant and machinery. So I'm going to do the working for plant and machinery. This is the working note, plant and machinery account. I'm going to prepare the plant and machinery account. Okay, plant and machinery account. So this side is your credit side, this is your debit side of plant and machinery. So see the information of the plant and machinery. Opening balance of the plant and machinery is given, to balance brought down. So opening balance of plant and machinery, 31st March 2016 balance is opening for the next financial year. So 12 lakhs is the opening balance. 12 lakhs is the opening balance. So write the 12 lakhs. This is the opening balance of plant and machinery. Okay, this is the opening balance of plant and machinery. Opening balance of plant and machinery, you write it. Okay, so to balance brought down 12 lakhs. And closing balance is given by balance carried down. Closing balance is by balance carried down is 15 lakhs. How much it is? 15 lakhs. So see the information which is given for the 2 consecutive years. Last year balance is the opening for the current year, and this year balance is the balance CD. Plant and machinery is the assets. Obviously the opening balance we will write in the debit side. Regarding the plant and machinery, additional information, in additional information it has written that, and it has given that depreciation charged on plant and machinery. So you write by depreciation account. Depreciation charged on plant and machinery is 72,000. This is the amount of depreciation which is charged. Next is plant and machinery with a book value of 1,20,000 was sold for rupees this much. So profit oblique loss on sale of plant. Sale of plant, profit and loss oblique sale of plant and machinery. So book value of the plant and machinery which is going to sold, which is going to sale is 1,20,000, and it is sold for rupees, less sold for rupees 75,000. It means less than the book value. Plant and machinery is sold below the book value. So there is a loss of 45,000 loss on sale. Loss on sale of machinery is 45,000 is the loss. So this we will write this side. By bank account we have sold at 75,000 and there is a loss. So we will write by statement of PL, statement of profit and loss. If there is a loss, this will be transferred to statement of profit and loss. In case of profit, we will write this side. So 45,000 is the loss amount. Credit side we have done. Posting is done in the credit side. Okay. Is there any other information regarding the plant and machinery? No, any other. That's it. Depreciation is given. Sold for rupees 75, loss I have written it. So do the total this side. This side total is 0, 0, 0, 2, 1 carry, 15 or 4, 19, 1, 6, 1, 16 lakh 92,000 is the total. 16 lakhs 92,000 is the total. So difference will indicate purchase of plant and machinery. This indicate balancing figure. Through the balancing figure, this figure will indicate the purchase. Difference amount will indicate the purchase of plant and machinery, 4,92,000. This is the difference amount. Purchase of plant and machinery. So here cash flow from investing activities, name of the firm is not given, so I have put the dash for the year ended 31st March 2017. Okay. So purchase of plant and machinery. Purchase of plant and machinery is 4,92,000. This is what? This is outflow of cash. Outflow. When we purchase it, it's a outflow. And when we sell it, proceeds from sale of machinery is how much? Proceeds from the sale of machinery is 75,000. It is 75,000. This is inflow of cash, amount received. When we sell the machinery, this is a inflow of cash and cash equivalent, under the investing activities, because we are selling. Proceeds from sale of machinery, sale of machinery. Is it clear? Proceeds from sale of machinery. Now next is, coming to the next, after plant and machinery, next is investment. Coming to investment. Now we'll do the working in investment. Working of investment. Second working is for investments. Investment account. Okay. Second working is for investment account. So debit side, you write the opening balance of investment long term. So in 2016 it is 1,50,000 and 2017 it is 4,20,000. So opening balance is two balance brought down. Opening balance of investment is 1,50,000 and closing balance of investment, you write this side by balance carried down. It is 4 lakh. How much? It is 4,20,000 is the closing balance of investment. Okay, closing balance of investment is 4,20,000. Now see the information related to investment which is given in point number 3rd, additional information point number 3rd. Investment were purchased for rupees 3 lakhs. When we purchase the investment to bank account, investment were purchased for rupees 3 lakhs. Okay, I have written 3 lakhs. Some investment were sold at a loss of 10,000. Some investment were sold at a loss. So by statement of PL, by statement of profit and loss. So by statement of profit and loss, it is 10,000, sold at rupees 10,000, sold at a loss of rupees 10,000. So by statement of PL 10,000. These two information is given regarding the investment. One is investment purchase 3 lakhs and second is in some investment are sold at a loss of 10,000. Now we will find it out at what value the investment is sold. So you do the total of the debit side, it is 4,50,000 is the total. You write the same total over here, 4,50,000, and here bank accounts. This will be the balancing figure, at what value or at what amount the investment is sold, at what price. So the difference indicate the 20,000. This 20,000 indicate that the investment is sold for rupees 20,000. So here when we sell the investment, so proceeds from sale of investment, proceeds from sale of investments, it is 20,000. And here when we purchase the investment, it's a outflow, purchase of investment, it's an outflow of cash and cash equivalent under the investing activities. 3 lakhs is the outflow. So outflow will be indicated in bracket. After that you see the land. Next ledger I am going to prepare, that is the ledger of land. Yes, I am going to prepare in the working note. It's a working note, land account. Okay, it's a working note, land. So you see the information about the land. Opening balance of land is 2 balance brought down is given. 2 balance brought down of land is 5 lakhs and closing balance of land by balance carried down, that is 4 lakhs is the balance carried down. So opening balance of land 5 lakhs and closing balance of land is 4 lakhs. 2016 balance is opening for the next financial year and 2017 balance is the closing balance. Regarding the land, you see the information number 4, land was sold at a profit. So when it is sold at a profit, the profit amount we will write in the debit side is statement of profit and loss. So a statement of profit and loss, it is 80,000, sold at a profit of 80,000. It means at what amount or at what value the land is sold. This we have to calculate. So 5 lakh 80 I have written both sides. Here by bank account, balancing figure. So land is sold at rupees 1,80,000. 1,80,000. Is it clear? 1,80,000. This is the balancing figure. 1,80,000. Okay. So the sale of investment, we will write proceeds from sale of land. Sorry, proceeds received from sale of land. Proceeds received from the sale of land is 1,80,000. This is the inflow of cash under cash equivalent under the investing activities. Next is your point number 3rd. You see the additional information number 3rd. The last line, interest received on investment. This is the interest received on investment. This is the inflow. Interest received on investments. Interest received on investments. This is the inflow. That is 15,000 interest is received. So inflow of cash. So the outflow is 7,92,000 is the outflow under the investing activities and the inflow under the investing activity is 0,000,922, 2,90,000. 2,90,000. So deduct it from this amount. So 0,002,05. 5,02,000 is the cash flow from, minus is more, outflow is more, so this will be shown in the bracket. So cash used in, you have to write cash used in investing activities. Investing activities. Cash used in investing activities. How much? 5,02,000 is the cash used in investing activities, because it's a minus. Outflow is minus and inflow is less, outflow is more by 5,02,000. So net cash used. If it is a plus, then we will write cash flow from investing activity. If it is the figure is plus, then what we will write? Cash flow from investing activities. But if the figure is minus, then we will write cash used in investing activities. Used in investing activities. So working note number 1, 2, 3. One more working I have done it related to the sale of profit or loss on sale of machinery. Okay. So this is what we have prepared. Cash flow from financing activities. Cash flow from financing activities. Cash flow from financing activities. This is inflow, this is outflow, and this is inflow. So net change is minus. So net use cash used in investing activities 5 lakh 2000. So cash flow from investing activities will be the heading for the year ended 31st March 2017. Now we will see one more question based on the financing activities, cash flow from financing activities. One more question. So question is, you note down the question first. Okay, pause the button and note down the question, and then go through the question, and then you see how this question is going to solve. From the following information of X Limited, calculate cash flow from financing activities. So in this question, the information of 2 consecutive year is given. Consecutive year is 2017-18, 31st March 2017 and 31st March 2018. Regarding what? Regarding the equity share capital, 12% debenture, 10% debenture, bank overdraft. These 4 information is given of 2 consecutive year, 2017 and 2018. Thereafter additional informations are there. There are total 4 additional informations. Number 1 information is, during the year 2017-18, that is the current financial year, X Limited issued bonus share in the ratio of 1:2. Bonus share in the ratio of 1:2. First one is, during 2017-18, X Limited issued bonus share in the ratio of 1:2 by capitalizing reserve. Second is, 12% debentures were redeemed on 1st July 2017 and new 10% debenture were issued on the same day at a discount of 5%. Third one is, proposed dividend on equity shares capital of the previous year ended 31st March 2017 was 8%. Okay, 2017 means previous year. Interest on bank overdraft is 10,000. From this information you have to find out the cash flow from financing activities. So name of the company is what? X Limited. So we'll write cash flow from financing activities of X Limited, number 1, for the year ended 31st March 2018. Okay, 31st March 2018. Now come one by one. Share capital. Okay, you see, in information number 1 it has given that in 2017-18 X Limited issued the bonus share in the ratio of 1:2 by capitalizing the reserve. So when the bonus share is issued by the company, so that bonus share is always issued by the company from their reserve money. So there is no outflow of or inflow of cash under it. No cash is coming into the business because they are using the reserve money. It's a capitalizations. Reserve money is shifted to the share capital. So there is no flow of money when the bonus shares is issued. So it is 1:2. Last year it was 20,000, 20 lakhs, share capital was 20 lakhs, and this year it is 30 lakhs. So when it is issued in the ratio of 1:2 means what? Bonus shares issued in the ratio of 1:2 means those who have the 2 shares, they will get 1 bonus share. Those who have 2 shares, they will get 1 bonus shares. So it is 1/2 into 20 lakhs. It means 10 lakhs is the bonus shares. 10 lakh is what? 10 lakh is the bonus share. 10 lakhs is our bonus shares. 10 lakh is bonus shares. Okay. So previous balance was 20 lakhs and 10 lakh is the bonus share. So current is 30 lakhs. Share capital is 30 lakhs. So when it is increased from 20 to 30 lakhs because of bonus share, so there is no inflow of cash under the equity share capital. Number 1, is it clear? Number 2, coming to the 12% debenture. Last year debenture was 3 lakhs and this year no debenture. So regarding the debentures, you see the point number 2, 12% debentures were redeemed on 1st July 2017. So repayment of debenture, redemption of debenture, when the debenture is redeemed, redemption of 12% debenture. This indicate outflow of cash and cash equivalent. 12% debentures, redemption of 12% debenture, that is 3 lakhs. So this is the outflow. Redemption of debenture indicate what? It's indicate outflow of cash and cash equivalent under the financing activities. Next is 10% debenture. Last year there was no debenture and this year it is 5 lakhs. Means issue of debenture. You again see the point number 2. 10% debenture were issued at a discount of 5%. So issue of new debenture, new 10% debenture at a discount, at 5% discount, at 5% discount. It means debenture is of 5 lakhs and when it is issued at a discount of 5%, so discount amount is how much? It is 25,000 is the discount. Okay. So 5 lakh upon minus 25, so 4 lakh 75. In business the amount will come 4 lakh 75. It's a inflow at a discount of 5%. So 5 lakhs into 5 upon 100, this is the amount of discount. So 5 lakh minus 25,000, 4 lakh 75,000 will come in the business from the financing activities. Next is bank overdraft. Last year it was 1 lakh, this year it is 80,000. So bank overdraft is decreased. So it is what? It is a decrease in bank overdraft. Decrease in bank overdraft indicate it's a payment. Decrease in bank overdraft, what it is indicate? It indicate the payments of bank overdraft. It's indicate payment. So it is decreased by 20,000. So this is the outflow. Decrease in bank overdraft indicate what? It indicate outflow. Now coming to the point number 3, proposed dividend on equity shares for the previous year ended 31st March 2017 was paid. So dividend, proposed dividend of previous year, proposed dividend, when it is paid it's a outflow. Proposed dividend of previous year at the rate of what? At the rate of 8% into previous year share capital was 20 lakhs. So it is 1,60,000. 1,60,000 is the proposed dividend which is paid this year. Okay, proposed dividend of previous year. This is paid 1,60,000. Next is regarding the interest on bank overdraft. It is also an outflow. Interest on bank overdraft overdraft. It's also a payment. So interest on bank overdraft is 10,000. It is also paid. It is a payment outflow. Coming to the interest on debenture, calculation of interest on debenture. Point number 2, additional point number 2, 12% debentures were redeemed on 1st July 2017. So previous year debenture, will do the working separately for that. Calculation of interest on debenture, calculation of interest on debenture. So last year debenture was 3 lakhs, rate of interest is 12%, and this debenture, as per the information number 2, additional information number 2, it is redeemed on 1st July 2017, means April, May and June. We have to pay the interest for 3 months, April, May and June, because it is redeemed on July 1st. Okay, 3 months interest will be paid. So it is 9,000 is the interest on debenture. Next debenture is, which is issued 5 lakhs debenture, rate of interest is 10%, and you see the point number 2, additional information. So new debenture 10% were issued on the same date, on 1st July. So interest will be calculated from 1st July to 31st March. So 9 months, 1st July to 31st March, 9 months. Interest will be calculated by us. Okay. It is 005. So 37,500. So it is 46,500. Total is 46,500. So payment of interest on debenture, interest on debenture, that is 46,500. These are the outflow. These are outflow. Is it clear? Is there any inflow of cash except 4,75,000? Any other inflow of cash? Now what you do, you add this outflow. This is 0, 0, 5, 6, 2 or 6, 8, 9, 9 or 4, 13, 1, 4 or 1, 5. 5 lakh 36,000. This is outflow. And inflow is 4,75,000 is the inflow. Now see the difference. 0, 0, 5, 1, 6. 61,500 is the outflow. So net cash used in financing activities. Cash used in financing activity is 61,500. 61,500. Is it clear? So here the bonus share is issued. That's why bonus share is issued from our reserve money, from our past accumulated profit or reserve money. If bonus share is issued, there is no flow of cash, no inflow of cash. Share is increased because of bonus share. It means there is no inflow of cash. It is a process of capitalization process. Redemption of debenture, decrease in bank overdraft, proposed dividend of the previous year paid, interest on overdraft paid, payment of interest on debenture. Okay, this payment of interest on debenture 46,500. One debenture which is redeemed on 1st July, interest will be calculated for 3 months. Another debenture which is issued on the same date, the interest will be calculated for 9 months. Rate of interest on this is 10%. So total is 46,500 is the payment of interest. This is working note. This is what? This is working, coming under working note. Is it clear? Working notes. There is only one inflow issue of new debenture which is issued at a discount of 5%. So 5% you reduce it, debenture is 5 lakh, and when it is issued at a discount of 5%, so less 5% discount, so less 5% discount. So 5% is 25,000. So in business the money will come 4,75,000. This is the inflow. 4,75,000 is the inflow from debenture, issue of debenture.